Today we're going to talk about 4 things that are frustrating but that are normal when you stock trade. These things happen to all traders. The difference is trader A deals with it in a negative way and trader B has not matured to deal with that in a positive way. So let's get right into it. Number 1, and that's having losing trades. It's inevitable that you will have losing trades. So don't trade trying to avoid a losing trade. What does this mean? It means if you have a losing trade and it's time for you to exit that trade because it has reached your max loss, it has reached the criteria that you use to exit a losing trade, make sure that you exit the losing trade. Because there's a difference between making money and trying to be right. And that's what that means. It means that if it's time for you to exit a trade, you exit the trade because you're not trying to be right, you're trading the right way, and you're not trying to avoid a losing trade. You're just trading your game plan. You have a solid risk management plan, you hit your max loss, and you exit the trade, and now you're ready for the next trade. With that said, having a losing streak is very, very normal for all traders. And that's why having a solid risk management plan that accounts for a losing streak is more important than having allocated on a per risk trade basis. So you don't want to just focus on, hey, I have X amount of dollars to risk on this trade. You want to focus on, what if I go on a losing streak? And this is normal to go on a losing streak. So make sure you have a solid risk management plan that accounts for a losing streak. At the same time, you're going to maybe have a losing week or a losing month. And these things are normal. So if you're going through a rough patch or you're going through these type of scenarios, know that this is normal. So therefore, it'll always go back to having a solid risk management plan and understanding that you must go through your losses safely. Do not try and get aggressive and make up the losses by placing irresponsible, reckless trades so you can make the money, so you can feel a certain way and not have to cope with those losses. So make sure that you're not trying to avoid a losing trade. This is normal, perfectly fine. And when you talk to other traders, all they're going to ask you is, how much risk are you taking on a per trade basis, and if you're following your risk management plan. Number 2, and that is getting stopped out and then the trade going for you. This is probably more frustrating than getting stopped out, because if you get stopped out and you see the stock falling, obviously you're like, well, thank God that I did stop it out and I followed my plan. But if you stop out a trade and then you see it turn into a profit, that mentally can affect you in a negative way and can turn you angry, frustrated, and now you may be chasing the trade, you may be thinking about other things that are negative. Make sure that you understand this is normal and you're not going to avoid this. This is going to happen. There are certain times when the market is moving too fast, hits your stop loss, and then turn around. It's perfectly fine. There are going to be many, many other trades for you to place. But once you understand that this is just part of trading, that this is part of just one trade of your trade sequence, that this might happen, and if this is happening a lot to you, then you may have to look at, are you placing your stops too close? And you may want to widen your stop loss. But if you widen your stop loss, you're going to take on more risk. So you may have to reduce your size to have a larger stop loss. What does it mean? If you're trading 100 shares and you're only risking $100, then if you still want to risk $100 per trade, then you may have to buy only 50 shares. So now you adjust the position, but you also follow your risk management rules. Let's go with number 3, and that's taking profits prematurely. This is by far, once again, frustrating, but normal. A lot of traders leave a lot of money on the table because you're not going to be perfect. You're trying to hit and ride a moving target. And when you do that, when you're in a trade and you're taking profits, a lot of times traders don't take profits because they fear that they're making an incorrect decision by taking profits and that the stock might go higher. So you can't be always in a fear-based mentality, fear that you're going to lose money, and fear that if you are making money, then you're not going to make enough to satisfy any personal needs. You want to follow your game plan, and that's more important than anything else. So if you take profits, just know that it may not be the top, and that's being competitive and trying to be perfect. And they might be a little bit of ego and pride in that. But make sure that you're trying to make money and not trying to be right. There's a difference also when you're trying to be right and stopping out your trades and trying to be right and make money when you're taking profits. So make sure that you have your rules set up. This is where I take my profits. You're following the rules, you're building accountability, and therefore you're ready for the next trading opportunity. But leaving profits on the table is normal. So don't feel like it's only happening to you. Get better at and practicing sim to capture better profits. And lastly, missing trades. Once again, this is frustrating, but it happens. It happens to all traders. You have a universe of stocks. Let's say you trade 5, 7, 10 stocks or more. You're going to miss trades. You're not going to be able to hit and enter every single trade and manage every single trade correctly. It takes a lot of practice to manage a lot of open positions. It takes a lot of practice to allocate the proper risk on your entire portfolio when you have a lot of open positions. And the decision making is very, very fast depending on the stocks that you're trading. If you're trading a lot of fast moving stocks, then your portfolio is moving a lot, and therefore you have to pay a lot of attention to your portfolio, always be on your screens, and you have to understand, how is this affecting your lifestyle? Are you performing your best because of the way you're trading? So adjust your trading so you're mentally, emotionally, and financially okay, balanced, and more importantly, that you're happy, because you want to be happy. You don't want to be, let's say, frustrated and angry because you lost money, and you're frustrated and angry because you could have made more when you exited a trade at a profit. So make sure you find a very happy balance so trading doesn't become so taxing, and you enjoy the journey and you enjoy trading. So thank you so much for watching this video, and I'll talk to you soon, and trade safe.